Mark, are you allowed to leave your desk? Because it's a fairly whippy session today.
Yeah, luckily, Guy, I don't really do any of the real work, but my team isn't allowed to leave the desk at all. But no, it is absolutely crazy. Every time I step off to do a TV hit like this, the market might be several percent difference by the time I come back. It makes it pretty hard to keep track of things. I think what's really important in the development today is that, we talked yesterday about how everyone expected the National Development and Reform Commission to announce a massive stimulus package, even though it's not their mandate. And there was big disappointment in the market that this commission that doesn't announce stimulus hadn't announced stimulus. Well, the Finance Ministry now has a briefing on Saturday, and they are the group that is responsible for stimulus. So maybe we might get something there. I continue to think that some of the numbers that were bandied about during the holidays are absolutely crazy. Things like 10 trillion yuan at the upper end of the range. I don't think it'll be anything major like that. I think it'll be small steps. I don't think they want to fuel another major bubble. They want to provide enough stimulus to make sure that they ease the impact of the measures, the major amount of measures, the suite of measures that were announced pre-holiday. I think that overall, the more bullish backdrop for China and Hong Kong absolutely remains compared to where we were a month ago.
OK, and what does the price action to date, I mean, maybe it's difficult to read into the price action today, as you say, as it's been so there's so much volatility. But the fact that we paired some of the losses, but now we're back to intensifying those losses on Chinese stocks after we got that news of the intensifying counter-cyclical adjustment of fiscal policy meeting that is set to take place on Saturday. That did seem to calm things for a while, but not for long.
It really depends on your time span here. I think short term, the price action's pretty terrible. It doesn't seem to me that we've necessarily bottomed out in this in correction. But it's important to think that on a monthly basis, look, Chinese stock markets are still up 25% from where they were a month ago. That's quite significant gains. And I think that bulls have the stronger hands. People who have heard the message from the Chinese government that they're going to fix this, they will fix this, they have many tools to fix this, they're the ones who are in the stronger hands in the driving seat here. That doesn't necessarily... I don't know where the next 5% is. I have no idea. And you know what? If you made me choose, I'd probably say we've still got another 5% of downside. I think stocks will be higher a few months from now. I think that overall we've seen a turning point in the China story, and that's the more important one, even though the very short-term price action is negative.
OK, well, we'll have to wait for the price action off the back of that announcement on Saturday. But in the meantime, we've got Fed minutes coming tonight. You're looking for surprises, Mark?
Do you know what? I think we've already moved on from the Fed minutes to some extent because of the jobs report last week. I've heard various arguments either way on whether they'll be hawkish or dovish. I think that whatever happens, they'll have a little bit of an impact, but they won't really kind of change the narrative. Perhaps the more sensitive side would be if they were hawkish. You've got to remember that yields were only at those lows because the Fed had cut by 50 basis points. But now that we've had that jobs report, I'm expecting that overall yields have upward potential from here.